Welcome back to the Dividend Diplomats YouTube channel. You've got Bert, the one and only, and Lanny, the Dividend Diplomats, guys. And we're here to talk to you about this one stock. And could this stock be the best stock in the oil industry? Let's find out.
Smash that subscribe button before we do. Give this video a thumbs up. Help your boys reach 20,000 subscribers. Let's freaking go. Let's learn about whether this company is or is not the best stock in its sector.
Guys, we're talking today, about not ExxonMobil, not BP, but we're talking about Chevron stock again, ticker symbol CVX. And, is Chevron the best oil stock right now? What we'll do actually is we're going to compare a little bit of their financial performance and balance sheet to another competitor. And I don't want to use ExxonMobil because everybody will use ExxonMobil, but instead, I want to use a stock that I own, and that is Shell, ticker symbol SHEL, another beast in the industry, and in fact, actually generates more revenue than Chevron. So I really wanted to see, okay, how do they compare financially and from a stock price undervaluation, dividend growth standpoint, guys. So
Freaking love it. Yeah. So what we're going to do is we're going to break them down with some of the metrics here. To your point, we're going to go to the income statement. We're going to talk about shares outstanding, some long-term debt, then we'll run them through our screener as we go along. So this is going to be a lot of fun. We can't wait to see, especially because big oil's never going anywhere. It's not going anywhere anytime soon. People have more dependency on oil than ever. And it's crazy, but it's not going away. So you might as well jump in and embrace it and see which one's going to be best for your portfolio.
So when we dive in and peel back the layers with Chevron, in 2019, pre-pandemic, they had 140 billion in revenue. Fast forward at the end of 23, they had 195 billion. So that's a compound growth rate of 8% of revenue growth a year for
Net in,
Chevron
yeah.
stock.
Yeah. So if we then do you want to compare Shell? Yeah, let's compare
Yeah,
Shell's to it. All right,
yeah.
Shell's revenue. Oh man. 344 million of revenue in 2019. 2023 is 316, or it's billion. I'm sorry. This is not million. I'm billion. I apologize. Throw some zeros on there. 316 billion. I should have laughed even harder. So that actually went down a little bit when you're there, but it's still a massive amount of revenue. So the compound 5-year growth rate is only 1.64 negative. Went down, remember.
Yeah, so they haven't recovered all the way back.
Nope,
They
they
did
have
in
not.
2022. It seemed like everybody spiked it, obviously, in 2022, and they had the big rush and, a push up in oil in 22. And obviously, with inflation, everybody's talking about how to keep prices down. When you keep prices down, revenue usually goes down for big oil when the price per barrel goes down and the price for the pumps goes down. So Shell just doesn't hack it. But let's look at net income. So Chevron's net income was 3 billion in 2019 and it has swelled up to 21 billion by 23. So that was a growth rate of about 126%
Oh
average.
my gosh. All right. Net income 15.8 billion. I got it right this time. In 2019, 2023 for Shell is 19.4 billion. Growth rate of 4.44% on average. Not bad.
Not bad. Obviously, yeah, not bad.
Not
So
bad.
for the margin on the business right now, Chevron has much better margin. Average margin has been about 6.5%. And, Bert, what's Shell's margin?
3.5%. And that's been relatively consistent for Shell. It hasn't changed too much within there. A few years up, 1 year down, but overall, pretty solid margin.
And then from a share standpoint, Chevron's shares outstanding really has just been the same
Yeah.
over the past 5 years.
Yeah. They're which is different than Shell, believe it or not. Shell has seen some shares decrease. So we've gotten some buybacks here for Shell. 8.1 billion in 2019, it's down to 6.8 billion at the end of 2023. So decrease that share count, baby. That's what it's all about.
And this is what's cool for both of the stocks. Um, get into some of that long-term debt. Chevron started 19 to 23 billion, record low interest rates. So everybody just took on a crap ton of debt during the pandemic. But Chevron hasn't been able to actually get now below where they were pre-pandemic. So they were at 23.4 billion, but now their balance sheet only has 19.7 billion, so down about 15%.
Oh man. So Shell was at 55.8 billion in 2019, 48.6 billion in 2023. It has dropped about 12.93% on average. So
That's pretty good.
yeah, not
So
bad.
down
Yeah,
about
so
13%.
decreasing shares, decreasing debt. That's what it's about for Shell. Love it. Absolutely love it.
Yeah, it seemed like both companies had a trend downward every single year after COVID. So 2020, they both took on lots of debt, and then it looks like every single year after that, they're like, all right, let's clean this act up. All right, let's get into the metrics, guys. We're going to do it metric by metric, but for each stock here. So Chevron's PE ratio right now trading at $140.61. Chevron's PE is 13.65.
All right. Their Shells, their share price is 67.45. EPS is $8.30. That's an 8 PE ratio.
Wow, so Shell is actually lower on the price to earnings standpoint. Did not
Yeah.
expect that.
No.
All
I
right,
mean, I knew
interesting.
Chevron is usually one of the more expensive. I expected them to be higher than Shell. I didn't expect the gap to be that wide though. It's kind of eye-opening to me that it's that much of a difference between the two.
And this is what I thought was kind of interesting is the payout ratio for Shell on the dividend standpoint is 63% right now. So I think earnings estimates are coming down, obviously, with everything that's going on with the price of oil. So that is pushing that payout ratio up. So
Yeah.
63% for Chevron.
Interesting. Shell, their payout ratio is at 33%, and they've gone through. I don't want to speak too much on this. I'll save it for the next metric. Let's just put a pin in this, and we'll come back to why their payout ratio is so much lower.
Not afraid by Chevron's payout ratio at 63%. I've seen oil high. Just
Yeah.
go ask ExxonMobil.
Yeah.
You know, but the 5-year dividend growth rate for Chevron is at 6.4%. Pretty solid. 36 years of doing it.
Yeah. Well, let's talk about Shell.
Let's talk about it.
It's not like that. Their 5-year dividend growth rate isn't positive. No, it's not positive. It's negative 27%. Although they have increased it for 2 years, it's very misleading because what you've seen with Shell's dividend is woo, boom, Undertaker. Now it's chugging back up. Done a good job. They cleaned up the dividend. They've cleaned up their balance sheet, obviously, by paying down some debt at the sacrifice of their dividend. So no history of dividend growth at the moment. They paid dividends forever for a really long time up until this major dividend change a few years ago, and now they're building it back up once again.
Exactly. So the current yield for Chevron stock is 4.64%, which is very nice, especially if you caught our previous episode on Tuesday for stocks that Bert might be looking to exit.
Hmm.
Hmm. Hmm.
Hmm.
And looking for
Hmm.
a yield that would complement a certain exit.
Hmm.
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 Yeah, they're trading below their 5-year dividend yield average for Chevron. Check that video out, by the way, guys. But it was at
Hmm.
4.71%. So their yield is slightly below.
Yeah, Shell's yield is 4.08%, which also aligns with another company I discussed in the video. So, hmm, hmm. Saying it's not even worth comparing Shell to their 5-year average dividend yield as well, because
Yeah. And
it's
with the
catty
whole
worth
ticker
it.
symbol change, too, it kind
It's
of messes.
international. Yeah, just get about it. We're
It's
focusing on
well,
Chevron. We're
no, but yeah,
focusing on
but
Chevron.
you always want to see if Chevron is better than at least Shell and see where the industry is. Shells you really can calculate because when they were trading under RDS dot A and dot B, it's just it gets all the metrics you guys know, if you know, it gets wonky when people trade, like change their share structure and all of that. So
Secondary headline: Did Lanny set Shell up to fail in today's video?
they too big to fail to mess the stock screener. Now, year to date, Chevron, I'll talk about the three performances here. down 6% this year, down 16% since last year, up only 15% in 5 years. What?
Ooh. Hmm. Interesting. All right. Shell up 2.34% year to date this year. What?
No, it's just this is hilarious.
Oh, okay. I wasn't sure if I said something. All right. 1 year they're up 4.33%. 5 year they're up 18.60%. So,
I gotta check something out.
yeah.
Yeah,
Yeah.
18.6% in five
Interesting.
years.
So they're both getting smacked compared to the S&P 500 over the last 5 years. I think it's
Mm-hmm.
interesting that Shell's been performing much better in the short term, even beating them in the long term. It kind of blows my mind that Shell's performance has just been better than Chevron.
Same. I would agree. But guys, let's get down to it though. Is Chevron the best oil stock right now? When you think about them, 200 billion in revenue, 10% plus margin, growth in those areas over the last 5 years. Long-term debt is coming way down right now, below 15 PE, okay payout ratio, great dividend growth. They're a dividend aristocrat, solid yield. You get paid for while you wait for some performance. Lagging, lagging Shell on the stock a price standpoint. Is Chevron the best stock? What do you
Hmm.
think, Bert?
I mean, Chevron is a fantastic company. I I I don't think we should take this as is Chevron the cheapest value? Because that's not the answer. That's not what you're asking. You're asking, are they the best stock? And from the metric by metric
In the
standpoint,
oil
in,
industry.
in oil, thank you. Yeah, in interesting. Metric by metric, Shell's metrics look great outside of the dividend growth and a slightly lower yield. Performance, they've been better, cheaper value, better payout ratio, and you're getting more yield for the payout ratio at 4% yield on a 33% payout ratio compared to Chevron's 4.64% yield to a 63% payout ratio. So Shell hasn't beat there, but I mean, look at those income statement metrics, and you just read them again and just talk about how Shell's doing a great job growing that income statement.
Yeah, I mean
I meant
Chevron
Chevron, I'm
going,
sorry, how
yeah,
Chevron's
yeah,
growing its income statement.
going from 3 billion to 21 billion, and that's after having 35 billion in 2022. They'll have this long-term trend upwards in net income, in revenue, whereas Shell is still trying to, they've grown past their 5 year net income standpoint, but they're still trying to figure out the top line.
So what do you think? What would you say? Are they the best oil stock? Chevron. What's your
I
thought?
think it's the most conservative way, you know, that has the best, based on, again, you can never predict future performance based on past performance, but with what they've done and been able to do, they were in my opinion, the least worried oil stock during the pandemic. I was more worried about ExxonMobil.
Yeah,
And so I think, in my opinion, again, do your own research, but I think Chevron is the best oil stock out there.
I agree. They're very well managed. So everybody, let us know what you think about Chevron in that
Hmm.
comment section below. And don't forget to like this video and subscribe to the channel. What do you think?
Let's go.
Anything
Let's
else
go.
we should tell the diplomaniacs out there?
Yeah, guys, keep saving, keep looking for stocks to buy right now. Let's all build passive income. Let's all get to financial freedom. That is the name of the game, guys. But again, like, subscribe, and you're either with us or you're against us, Jack. That was Bert the Hurt and Lanny from the Dividend Diplomats. Over and out.